Good morning, traders from each and every part of the world that you're joining this series of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to assess various asset classes. Very nice. So, this is going to be a pre-recorded YouTube video to mean that you could access this YouTube video at your own free and convenient time at HFM YouTube channel at HFM Kenya. Like, subscribe, and click on the notification button so that you're not left out in future content that we produce from time to time, with our goal being to bridge the educational gap. Now, I'll give a 3-second moment of silence to allow you to subscribe, and it is our commitment that we will keep improving on our education to even make our clientele understanding of the financial markets even much more better. So I'll give a 3-second moment of silence. Nice. Now that you have clicked, liked, subscribed, and shared, we would proceed with our usual pattern. Number one, we look at fundamental analysis to see what is moving the market, what are the forces moving the market, and we shall be focusing on the highlights. And it's quite an interesting year because every day there is something new to talk about, there is something interesting to talk about, there is something appearing to be uncertain, which the markets would react from. And today, those particular segments which move the market, those highlights would include positive wage growth in Japan. We shall see the number of wage growth in Japan has increased, so we shall see in JPY pairs the reaction of this USD JPY. We shall see the bearish connotation it is attempting to allude. On top of that, we also have mixed reaction to the United States. We have the ADP number coming out, ADP automatic data processing, which shows the number of of people who have gotten employed in the private sector. Some would argue it's an extension of NFP, which is to come out tomorrow during New York session. But at the same time, we also have ISM Services PMI, Purchaser Manufacturing Index in the services sector, coming out quite light or negative. So we see both positive and negative news from the United States. How do we interpret this? Fully reliant on the chart patterns to find repeatable patterns in the wake of this fundamental analysis, so that to know how to navigate. On the flip side also, in indices, baskets of stocks, we see much more of choppy markets where the market is moving in a sideway manner, not giving clear market direction. Of course, in such instances, we will wait for break of key areas of interest for us to be certain of market direction. But for scalpers and day traders might hold a different opinion, where they find short-term market movement to have much more easier market breakaways for possible profits. Now, as an indication for that, we see ISM Services PMI for January coming out at 52.8, with the anticipated at 54.3 and the previous at 54. So we see it is lower than previous and consensus. That's the first reaction the US dollar gave us on a high impact. You'll notice it's high impact. We could all access this on our calendar at hfm.com economic calendar. It's right here on the tools. Could find it here. Okay, so on ADP, another high impact. You'll notice they are red to mean that their impact is quite significant. We have the number of jobs in the private sector being at 183k, with the consensus bid at 150k and the previous being at 176k, yet to be revised. But the point here is we see the 183k being higher than the consensus, and obviously higher than the previous. So we see a little bit of mixed reaction. Let's go on the charts and see the interpretation of that. Now, beginning with gold, um, we have time without numbers mentioned that geopolitical forces tend to move gold much more aggressively, and these tensions are brought right now in this time in history by the trade wars which are happening between United States and her business partners, if you like, or other countries which trade exclusively in large quantities with the United States, with a key focus on Mexico, China, and Canada, where we see imposition of tariffs. Now, these tariffs, which are taxes on imports, are causing these other countries also to retaliate with other policies, which might not be favorable for the United States. Some have opted to negotiate, like Colombia, Mexico, also Canada, also in the verge of negotiation, which this confirms the power of the United States in the global economic affairs. With that withstanding, the point is the fear which is brought about by these trade wars between these countries is causing gold to print much more higher. And from Q3 of last year, we have been calling it out for price to print much more higher with the war escalation in Q4, the last 3 months of last year. And now we see trade wars coming in, so we shall see these repeatable trends reorganizing themselves in different contexts, but the point is to locate that they bring fear and uncertainty. This causes gold to print much more higher. Now, the mixed reaction from the United States on economic data might not be necessarily said to have affected this market trend, but it does to an extent, and we see that the yesterday closing with a bullish candle indicate that the bullish momentum is still very, very high. Now, for entries, we would wait for retracements. I would go to a lower time frame to elaborate this. For entries, we would wait for retracement, for price to retrace until it gets to discounted levels, and then we get in for a buy, or around key areas of interest where price is seemingly showing us repeatable patterns for us to continue getting in for buys to the upside. On indices, like we have indicated, price is not giving us so much of optimism in that it is ranging or consolidating. So we want to wait for price to break from this key level. This is US 100. Some might choose to call it Nasdaq. Um, Let me switch to another one. You see, indices are giving us more or less the same vibe. Also on US 30, we see that price is not clearly broken the high. We want to see this high being broken out to confirm this long-term buy bias or bullish trend that we are currently experiencing. US 500 would also give us US 500 surely no. US 500 US 500 will also give us the same market connotation. The mood is a choppy market. We want to see it break above the highs to continue this long-term bullish narrative. For USD, for JPY pairs with a key on USD JPY, we see that price is printing on the lower side, testing this key level at around 150. Let me see, be a bit accurate with that. Around 152.034. This is the bearish movement is brought about by the positive wage growth data from Japan, which is indicating that their economy is fairly kicking in. Remember, Japan is known for having quite would say less young or old, if you may like, working force, the population there, majority of the people are old in the Asian part of the world. So when they have the positive wage growth, could be quite something to watch out for in the future, to see how this data will be interpreted moving into the future. Now, of course, the Bank of Japan is going to take key note of this, and this is going to affect the next interest rate decision that they're going to make. I guess we shall wait and see about that. For GBP JPY, we'll also experience the same. Price is printing to the downside, retesting this key level. If you noticed, let's go for USD JPY slightly again. The test of this key level is not a coincidence. It has been tested before a couple of times from this daily time frame. It has been tested a couple of times. So we see these repeatable patterns coming up. And when we have a feel or grit of both fundamental and technical analysis, becomes much more easy to trade them. GBP JPY also attempting to print bearish because of the positive labor data coming from Japan. Now we see it testing this key level right there. It is attempting to test it. Would watch out for other economic data coming from other jurisdiction in this context, England, which affect the GBP, and also from the United States, especially working after tomorrow as NFP, which is the grand labor data. We'll be watching out for that to see how this market will keep moving. Now, as a disclaimer, this by aging population. I see Jeff is saying Japan has an aging population. Yes, that is meant what I meant to say by saying less young. You put it outrightly, an aging population as it out to. Thank you for that. Yes, that is what I meant, Jeff. So, as a disclaimer, this by any chance is not made for financial advice. This is meant for educational purposes. It is important to do your due diligence, and most importantly, observe risk management. That would be a good place to start. And when you observe risk management, you will be in the financial market for a time to realize possible profits. Now, if this is your first time to get to interact with the financial market in any sense, if you feel that there's terminologies I have mentioned that you would like to take keen interest on and learn more, if you like to leverage on the education, visit our website at hfm.com. Attempt to register for an account, possibly by clicking register right here, like I am indicating with the mouse, and our experts will get in touch with you to help you and guide you and register you for seminars or webinars, both online and physical. And with that said, guys, see you tomorrow, the same place, the same time, to do things the same way that has proven consistent and profitable. Until then, God bless and take care.